Hey everyone, it's Dustin. Welcome back to the trading channel, and in today's video we're going to talk about how making money isn't the hardest part. Keeping it can be. I ended up closing today's trade just under $1,000, even though my target was $1,500. I do not regret the decision, and now we're going to get into the charts and talk about why. Going into today, I wasn't a fan of the break, so let me bring this bring this chart over. So in today's open, we were trading down from yesterday, and we sold off hard. So here's the bottom of the 15-minute orb range here on the 5-minute candles. So we had two red candles, green candle, and then a massive red candle. I did not like the trade here, trying to enter at the break at the close of this 5-minute candle. I wanted to wait for it to retrace back to the orb, because had I taken this, I wasn't trading the range because we had a big range trade today. Had I taken this, my stop was in the middle of this candle in no man's land. And as you can see, it would have gotten hit. So instead, I chose to wait for the pullback. So on the 1-minute chart here, you can see we pushed up, we pushed down. This put in the bottom of the orb. We rejected hard off of the bottom of the orb, and then we sold off hard there at the end of it. This candle did break the orb on the 1 minute, and we pushed way down. But I couldn't enter because we were way down here at the end of the 5-minute candle. So I drew this box. Actually, let me pull this back over. So I drew this box here when we put this candle down, because it was these wicks. This was my shelf that I drew out. And then there's actually one big box you can make, but I kept it separate just to show you the difference so you could see it. The second one is a fair value gap. So we had a wick here, and then the wick of this third candle was down here. So this gap in here was the fair value gap. So I, in turn, wanted to wait for it to pull back up into this shelf, really, at some point, which you can see prior day low here, pre-market low here, and then the orb here. So in this area through here was where I wanted to enter. So price pushed down all the way down to here. I drew this shelf out after these wicks were put in, and this wick here. We pushed back up. I thought I had missed it right here. I was like, if this sells down, it is what it is. I'm not going to be taking it. But we came back up, and then when we put this candle in, I was like, okay, it's not really in. We could still go higher into this shelf or higher up to the orb. But I went ahead and put an order in and took it right here for my first two contracts. We did pierce higher up here, but because my initial entry was here, I didn't want to add in that early. My stop was up here, and I just didn't want to take on that much risk in case we did flip for the day, with it being Friday and we were down about 1% already. So then when it came to managing the trade, we pushed up, we pierced into it, and we sold off. I was like, okay, this is good. Now we got to see what happens in this area down here. And we bounced, and I was afraid of this. I was thinking about taking one contract off down here, but I was torn on the decision of how to manage the trade, because this was my shelf that we had pierced into, but my entry was here. So my stop was still in losing territory right here, and this would have taken one contract off, and it would have limited that potential loss if it did flip. And I kept arguing with myself on what to do here. I decided to let it play out. We did pull back up. This made a lower low because these candles broke below here, and we pushed back up. I was really getting nervous through here on this push up, but I was at the same time not, I wasn't in size big enough to where my palms were sweating. I was freaking out because I was afraid of losing money. I was in the right size of the contracts, and my stop was in a good place, so I was comfortable with it. It did look very V-shaped recovery, or like a W pattern here, and as we approached, I wanted to see about adding in if we rejected from here without making a new high, and we did. So we put in these candles, and I felt like there would be a rejection somewhere after these candles, or a pullback at least. So I figured I would add in, and then I would manage my stop more aggressively. And because if with the entry, this first entry, the stop up here, I was risking like 360 bucks, I think it was. And so when I added this one, that pretty much doubled my risk to 720. But if I pulled the stop down here, I was actually only risking I think it was like 240. So I was risking less with the bigger upside. So I decided to do that. And so I added two more contracts here, And then I got nervous when we started chopping around through here. Then we pushed down, pulled back up. I put this box there. When I put this shelf there, I said, okay, we need to come back and test this shelf, and then I can actually move my stop down into this. But we didn't. We pushed on down, we pushed up, and then I got out. I manually closed it. My stop was, or my target was a little bit lower down, but when we hit down here, it wasn't as big of a candle as I really wanted to see. So I wanted to make sure I didn't leave anything on the table. And at the time, my stop was still up here, so I was looking. I was like, okay, what if I go ahead and move it down? And when I moved it down, it was like $500 to put it right above this wick right here. So I was like $500 profit there. I'm at almost 1,000 down here to make another 500, and I just made the decision. I would rather take $1,000 off and be done for the day rather than risk another 500 to try to make another 500. And that was just my thought process as we were going through. And I really wanted this to be a bigger candle, but I started seeing it bounce, so I manually closed it and took the trade off the table there. So part of the lesson today is that you can have your targets, but your targets are just a dot on the chart of somewhere where price could go. And then you have to make the decision of how to manage the trade when you're in the trade. And that's one of the things that this whole discipline journey has been about, is not overreacting, not getting greedy, not panicking and stuff like that, and just allowing yourself to think through the process of, would I be okay with this walking away? And today's Friday. I want to enjoy the weekend. We have a baseball tournament this weekend. I did not want to go away worried about, I should have done this or I should have done that. So $1,000 was way more than I even need in a day. It was just the market was set up for it today, and it was playing out the way it could have been, and my risk was small. Again, when I added in the extra contract and moved my stop down, I was only risking $200 to make 1,000 or 1,500 if it went all the way. If it came down here, when this bounced, I really thought about closing the trade out here, but at the time this hadn't been tapped, so my stop was still up here. So I was really thinking about what to do here when this was playing out, and then we finally sold down and broke down, and I went ahead and took it off there. So there was a chance this could have bounced, and I would have been managing the trade differently at that point. But when it hit this shelf, hopefully it would have rejected. If not, it could have came back and got me. As you can see, we came into this kind of the shelf area, sold down, and then up back into the orb here and sold down again. So this would have stopped me out had it happened back here. And then, as you can see, we've kind of traded higher today, and now coming back down a little bit lower. So managing the trade is just as important as anything else on the list when you enter and exit a trade. The entry is obviously very important. You have to pick an entry that you know performs over time. That's why we do trade the 5-minute break, but I don't trade the close of the 5-minute candle all the time, especially when it's down like this, because had I taken this trade entry down here, like I said, I would have gotten stopped out, and then I would have been questioning whether I wanted to get back in when this area popped up. So your entry is important, your exit is important, but a lot of it is the psychology, the thought process while the trade is going on. And knowing what you're going to be able to, you have to be able to think through it while you're in the trade logically. If you're thinking through it and you're panicking, you're emotional and everything, just walk away and then come back. You can miss things by walking away. I've done that. I walked away the other day for a trade. I was in the drawdown. We'll say price was up here, and my entry was here, and I walked away to go get a cup of coffee and came back, and we had popped down and came right back up. Had I been there, I could have took the trade off because I felt like it was going against me. Everything was showing that the market was going to go against me, but I missed that chance to take it off because I was away. So you really have to be able to manage your emotions, your thoughts, and everything when you're trading. It takes time to get there, and if you're over leveraging and you have too much size, it's going to make it even harder to get there. So today it wasn't about the most logical decision, letting it go all the way to profit, which, as you can see, it didn't go here. It was about what I can live with, and what I could live with was $1,000. I only want to target like $300 a day. $300 a day, 5 days a week is $1,500 a week, $6,000 a month. So, and anything above that in trading, that's what I love. You can add an account, you can add a contract, and you double that. If you add one account, it doubles. If you add one contract, it doubles. So Dynamic money management is very important in trading that I've learned here recently. And I will take the comfort of knowing I can walk away happy every time. So much better of a feeling than leaving upset because you didn't do something you know you should have done. This is the Daily Trade Journal. Hopefully you've enjoyed it and learned something. If you have, leave a like, leave a comment, subscribe, share it with someone that needs to work on trading or wants to make trading a reality, and hopefully I can help them as well. We do real trades, real discipline, real lessons. That's what it's all about. Build wealth, protect time, and I will see you Monday depending on what the market gives us.